Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Jeffk Klburg, CEO of KKM Financial, with an update on the markets. And Jeff, there is just so much to cover this Friday afternoon. In fact, the past couple of weeks, we've just continued to see this chop, whether we're talking about the Nasdaq 100 versus the S&P and Dow versus the correlation with the 10-year. We have ships getting stuck in the Suez. I mean, there's just so much going on.
There's a lot to go on, Jill. But certainly when you bring up about the chop, the churn, we actually call it the rotation trade. And rewind to last September when we saw that initial selling pressure in those Nasdaq 100 darling names. Now we are seeing some of the unloved names, some of these blue chip essential names. We're seeing the rotation in. Look at the Dow Jones, even the S&P 500. But it's such an interesting week. We're going to next week, which is the end of the month, end of the quarter, and we're seeing a lot of rebalance. So those are the big predominant undercurrents where we're seeing people try to reposition. Energy has been a forgotten sector as of 2020, and now it's the sector to be in 2021. And it's all jammed up, pun intended, what's going on in the Suez Canal.
That's a good one. And then as we look to get into April, and of course we have the Easter week in between there, but once we get into the second and third week of April, we now start to think about earnings. And of course the conversation is there in potentially a rising rate environment. We need to start to be able to justify the valuations that we're at right now. So profitability is going to start to come into question as well.
Yes, and that's a dislocation. I think we're still trying to connect what we see on Wall Street, the S&P 500 above 3,900, and stubbornly, it seems oscillating anchored to 3,900. But will we see that next leg higher due to earnings? I think that could be the catalyst. But one of the overarching themes that we can't neglect is the infrastructure. People are getting excited about this infrastructure spending and what names of the S&P 500 or potentially the Dow Jones futures will participate in that move higher. But I think here in Chicago, Jill, it's been really fascinating to see this quarter. Didn't have the highest expectations about the acceleration or the distribution of the vaccine. And here we are now seeing just tremendous job of this distribution. So I think everything we talked about of expectations for Q3, I think it's being moved up in a timeline, and that will be optimistic. That's where I get excited about the month of April as well as Q3.
I also think part of the challenge is too, the bond market's kind of telegraphing something different. And we spoke about this a couple of weeks ago than what the Fed is looking at in terms of inflation. And if this vaccination rollout continues to do better than has been expected, a lot of the demand for those services are going to get pulled forward. I think what's interesting though is the Fed might perhaps be looking at employment, because the employment data still is not caught up to where it was pre-COVID levels. And I think they're concerned with that.
Well, that's the dual mandate, right? And excuse me, I was talking about Q3. Obviously, when my mind's on Q3, I'm talking about Q2, which is starting next month. But the Fed Reserve certainly is in a bit of a conundrum when they saw the move higher in the 10-year note. That yield of 1.75 where it kissed and touched briefly, I'm in the camp that we're going to see lower yields. And this is what's going to happen next month. A lot of folks are talking about 2% 10-year. I disagree. We have too many newly anointed 10-year specialists out there. But if we do see the 10-year note stabilize and chop and move lower back to 1.5%, that allows earnings. That allows all these multinational companies to kind of digest and provide the corporation with some forward guidance. So I'm a big believer that we're going to see rates stabilize. I think that's going to accelerate equities to move higher this quarter.
Yeah, it's really interesting, Jeff, because the number of option strategists I spoke to this week, even though we're seeing chop and even though we saw movement in the VIX, we saw movement in vol Q, really when you look at the positions going out to the end of Q2 and the beginning of Q3 as we get into the summer months, they're showing it going back to more normalized levels, which is in line with what you're saying. Expect some chop, but things look pretty good longer term.
They do. And you have to remember, Jill, the pendulum swung too far. We saw a lot of options activity at the end of Q4 of 2020, even Q1 with the Robinhood and the Reddit undercurrents. Now we're seeing some of that option volume drop off. So it's just coming back to normalization. So it is hard to really measure and gauge using the typical ways we used to approach marketplaces. But you're absolutely right. I think this is a very healthy chop, a very healthy back and fill. It's a terminology we used to use a lot on the floors here in Chicago. That back and fill allows a foundation for equities to move higher this next quarter.
All right, Jeff. Appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.